Ladies and gentlemen, dear colleagues who, due to the pandemic, did not come in large numbers, because we wanted to invite more journalists to this press conference, because after a year we are seeing each other in person. So, welcome to the live presentation of the August inflation report. And I truly hope that in the coming period we will continue to hold press conferences in this manner, because this is an opportunity for us to meet and for you to see the extent to which we believe in what we are saying, because we do not want you to be surprised by the results. We stand behind those results, and because of these results, this is a fact, and I'm not being immodest in saying so, on the 6th and 7th of August, I celebrated my 9th anniversary as governor in my second mandate now. And this is the reason why there are symbolically 9 of us here at this table. Because it was my desire and the desire of my associates for you to see, in addition to the people you usually see, Vice Governor Željko Jović, Sava Jakovljević, General Manager of the Economic Research and Statistics Department, Nikola Dragašević as the General Manager of the Monetary and Foreign Exchange Operations Department, Milan Trajković as the Deputy General Manager of the Economic Research and Statistics Department. To my right, Mira Miletić as the Inflation Report Director, and Aleksandar Tomin. But today we also wanted to present to you 2 young people who have been with us again symbolically for full 9 years. And I'm really happy to be able to introduce to you, as a conservative woman, Danilo Cerović, and our Sonja, who came to the National Bank of Serbia as Sonja Jakovljević, but she married in the meantime, so she's Sonja Nedić now. She's the mother of a beautiful 2 years old boy. So in the National Bank of Serbia, you are not faced with the choice maternity or career. You can have both. It is never either or. And I hope that Danilo Cerović or Milanče and those who are not married yet will get married soon, because the National Bank of Serbia needs complete people, satisfied people who are dedicated to their work, but I don't want them at a single point to be in a situation to say that they sacrificed because of work something personal. So Sonja and Danilo are here. Sonja will provide details about the text box on the contribution of construction to GDP growth, and Danilo will answer any of your questions relating to the inflation projection, because this is his remit. He's a guy who has truly deserved to sit at this table, because many of the novelties we have introduced in building our inflation projection models are to his credit. I told them I want other people to see you. This table is not reserved only for us who are leading the National Bank, but also for those who are our direct associates, because they are my selected and closest family. I apologize for taking too long. Another technical detail only. After my presentation of the inflation report, you will receive a printed copy of the speech, because we want to avert any potential errors that can give rise to any misunderstandings. You will also receive a copy of Sava's speech as well, and a copy of the inflation report. Apart from monetary policy decisions and our estimates about inflation movements, one of the spotlight topics in the world, I believe that the fact that we have revised our most important macroeconomic projections will be of special interest and importance to you. I'm sure that you all know very well that when the National Bank of Serbia revises its projection and communicates that to the public, such revisions are always based on serious and detailed analysis and firm arguments. This is the reason why we stand before you today in a good mood and ready to answer any questions you may have. Though the risks emanating from the international environment still persist, the Serbian economy continues to grow even faster than initially expected. Such movements were largely supported by a comprehensive package of measures adopted already at the start of the pandemic. I have emphasized several times before, and I will do so again, timely and well-calibrated measures of monetary and fiscal policies have minimized the economic consequences of the pandemic, accelerating the recovery of our economy. We reacted timely and adequately, and that way, at the time of greatest uncertainty, we prevented the spillover of the pandemic-induced crisis on the fall in business and consumer confidence. At the same time, we managed to preserve the labor market and production capacities of our economy. Illustrative of this is the fact that we ended the year 2020 with one of the best economic results in Europe, and this year we expect to maintain the leading economic performance as well. The pre-crisis GDP level was exceeded already in the first quarter, one quarter earlier compared to the initial estimates. And the recovery extended in the second quarter when GDP rose 13.4% in year-on-year terms. Such outcome reflects in part the low base, but also favorable trends since mid-last year. Based on the indicators in the first 6 months and the expected movements in the key sectors of the Serbian economy, by the end of the year, we revised our economic growth projection for 2021 upward from 6% to 6.5%. As always, we remain cautious, having accounted for all the risks associated with the further course of the pandemic. We incorporated in our projection the possibility of a new pandemic wave in autumn, but if such wave turns out to be milder and without any major consequences on the economy, our growth this year could even exceed the projected 6.5%. At the same time, starting from the analysis of planned capital projects in road, railway, energy and utility infrastructure in the next 10 years, and their direct and indirect effects on other parts of the economy, we revised the medium-term economic growth projection from 4% to the range of 4 to 5%. The central projection of GDP growth over the medium term now stands at 4.5%, while overall risks to the projection are judged to be symmetric. According to our new projection, taking into account the estimated effects of planned infrastructure projects, the share of construction in GDP in the medium term, instead of the previously expected 6%, should reach around 7%, and this sector's growth should positively reflect on growth in industry, trade, transport, tourism, catering, as well as the sectors of finance and real estate. At the same time, the share of total fixed investment in nominal GDP in the next few years should reach and go beyond 26%, hovering at high levels for a longer period thereafter. The improved quality of infrastructure will positively reflect on the productivity of the overall economy and continued strong inflow of FDIs, thus creating conditions for the sustainability of the projected growth in the medium term. High economic growth rates are also recorded by some advanced economies, some European countries, but above all, the United States and China, whose rising demand brings many specificities, but also leaves consequences on the movement of prices and other macroeconomic indicators globally. Expectedly, the faster global economic recovery reflected on inflation movements in almost all countries. The news on the invention and distribution of the vaccine spurred optimism as to the global economic recovery, leading to a sudden rise in demand, to which the supply could not adjust in the short term, given the still present restrictions and halts in global supply chains. This led to a sudden hike in the global oil price, as well as in the prices of primary agricultural commodities, metals, and different materials used in industry and construction. As a consequence, inflation rose to 5.4% in the United States, to 6.5% in Russia, to 2.2% in the euro area, while in Germany, year-on-year inflation climbed to 3.8% in July, its highest level in almost 3 decades. Speaking of Serbia, despite the fact that some market segments have witnessed price increases, mostly as a consequence of the globally rising cost-push pressures, headline inflation continues to move around the target midpoint. Though higher than early in the year, inflation in Serbia is lower than in the majority of countries of the region running the same monetary policy regime. This is primarily owed to the preserved exchange rate stability and anchored inflation expectations of the financial and corporate sectors. After reaching 3.6% in May, partly also due to the low base effect from May last year, year-on-year inflation slowed down over the following 2 months, consistent with MBS expectations, and measured 3.3%. Certain deviations from our expectations have been recorded only in unprocessed food prices, which have been higher than seasonally expected over the past few months. The absence of higher inflationary pressures on the demand side, that is, our estimate that inflation is driven by temporary factors, is also confirmed by the core inflation, which has continued to move around 2% over the last few months. This indicates that in Serbia, unlike in some other countries of the region, no significant pressures are stemming from domestic factors. Speaking of inflation in Serbia going forward, according to our projection, year-on-year inflation will remain within the bounds of the National Bank of Serbia's target, that is 3 plus minus 1.5%, throughout the whole projection horizon, moving in the upper half of the target band most probably until the end of the current year and in the first quarter of the next year. Its decline is expected as of the second quarter of 2022, so that from the second half of next year until the end of the projection horizon, inflation should again move in the lower part of the band, that is from 1.5% to 3%. By estimating the current higher inflation as temporary and taking into account the fact that inflation projection over the monetary policy horizon, that is 1 year ahead, is below the target midpoint, the MBS, unlike some central banks in the region, did not raise its key policy rate and continued to pursue an accommodative monetary policy stance. Thus, we remained an equal partner to the Serbian government in encouraging economic growth and providing support to corporates and households through favorable financial conditions. In the period since the previous report, the key policy rate was kept at 1%, which is its lowest level in the inflation targeting regime, and also 1.25 percentage points lower than before the pandemic. Thanks to the effects of past monetary policy easing, borrowing conditions in the domestic market remained favorable, which continued to encourage lending, with further growth in the share of dinar loans in total loans. The rising lending activity is indicated by the amount of new loans to corporates and households, which during the 6 months of this year stood at the level from the same period in 2019, while relative to the first half of 2020, it was higher by a quarter. Since the start of the year, the Serbian economy also saw a significant improvement in external imbalances. After it went down by more than a third last year, the current account deficit began to decline since the start of 2021 and equaled only 1.8% of GDP in the first half of the year. A contribution to this came from almost all key components of the current account, with the export of goods and services particularly standing out. After last year's reduction of only 4.9%, we expect the goods and services export to increase by more than 20% this year, whereby it would reach the level of around 27 billion euros. Aware of such movements, the MBS revised its current account deficit projection for this year from 4.6% to 4% of GDP, though the result achieved in the first half of this year indicates that the outcome might be even better. At the same time, a strong inflow of FDI continued. In the first 6 months, it equaled 1.73 billion euros. And if we add the operational data for July and the first 10 days of August, FDI inflow since the start of the year equaled almost 2.2 billion euros. For the sake of comparison with the previous year, FDI inflow in the first 7 months is 30% higher, which confirms that intensive inflow of investments from abroad has continued. Foreign exchange reserves, which are also the result of the overall balance of payment movements and constitute an important element of the domestic economy's resilience to external shocks, increased even during the pandemic year of 2020. Since the start of 2021, we have been faced with prevailing upward pressures on the dinar, which we mitigated through interventions in the interbank foreign exchange market by purchasing foreign exchange, whereby we further increased our FX reserves. At end July, their level was a record high, 14.6 billion euros, and it covered more than 6 months' worth of goods and services import, which is double the standard that determines the adequacy of foreign exchange reserves. Of this, 1.8 billion euros pertains to 36.7 tons of gold in our vaults. And I underline in our vaults because over the past months we managed to bring the last amounts of gold, not only those 12 tons bought for the first time abroad, but 1 ton that was before in vaults abroad. We managed to bring it to Serbia. Developments more favorable than anticipated were also recorded in public finance, where the fiscal deficit in the first half of the year, amid a high increase in tax revenues, was significantly lower than projected and measured 1.4% of GDP. Such result leaves room for growth in government capital investments, which increased by almost 15% in the first 6 months, while their projected annual level could exceed 7% of GDP. In addition, such movements in the budget show that it is quite certain that public debt will remain below the Maastricht criterion of 60%, as noted also by international institutions and rating agencies. That Serbia's image is perceived as positive in the international environment is also indicated by the fact that our years-long work to include dinar government bonds in the renowned JP Morgan index has produced results, and our dinar bonds were included in this index on the 30th of June. What does this mean specifically for our country and our citizens? After the inclusion in this index, thanks to the expansion of the base of foreign investors investing in dinar government bonds, the yields on 7, 10 and 12-year dinar bonds of the Republic of Serbia in the secondary market declined during July by around 30 basis points. On this account, going forward, we can expect an additional decline in the cost of public debt servicing and, in turn, lower costs of private sector borrowing. Lastly, I would like to stress that in the past period, we also remained successful in the achievement of our second objective, financial stability. By ensuring dinar and foreign exchange liquidity in a timely manner, trimming the key policy rate and introducing a moratorium, we simultaneously contributed to the preservation of favorable financial conditions for corporates and households and their higher disposable income, as well as to the preservation of all financial stability indicators. Not only that the share of NPLs in total loans did not increase during the pandemic, it went further down and currently stands at 3.6%. At the same time, thanks to price and financial stability, the basis of which is also made up of the relative stability of the exchange rate, we have maintained confidence in the domestic financial system, as attested by dinar savings of households, which have been posting new records month after month and have exceeded 100 billion dinars, whereby we provide an additional contribution to the dinarization process in Serbia. Ladies and gentlemen, dear colleagues, allow me to conclude today's speech with the following words. Everything in terms of Serbia's economy that we have achieved in the years leading up to the pandemic, price, financial and fiscal stability, increased efficiency of monetary policy, anchored inflation expectations, narrowed external imbalance, economic diversification, a robust inflow of investments, and an increase in foreign exchange reserves, all of this has given us room to mount a more successful response to the economic consequences of the pandemic than we had been able during the previous crisis. The fight with the pandemic is not over yet, and it is certain that we are headed into another wave, but the end is slowly coming into sight. Our monetary policy priority in the coming period will certainly remain the same: the safeguarding of the achieved price and financial stability, with support to faster economic growth and creation of a favorable investment climate. As so far, we will continue to carefully monitor factors at home and abroad and their potential impact on inflation, the banking system, and further pace of economic growth, and if needed, we will adjust our measures in the interest of our citizens and corporates. Thank you for your attention. I now give the floor to my colleague, Sava Jakovljević.
Thank you, Madam Governor. And now we will give a few more details about our latest macroeconomic projections. And we will outline the key underlying domestic and international factors. As highlighted by Governor Tabaković in her introductory speech, we have revised up our real GDP growth projection for 2021 from 6% to 6.5%, taking into account favorable trends in the first 6 months and the anticipated developments in key sectors of the economy in the second half of the year. Growth could also be even higher in case of stronger FDI inflows and further acceleration of government investment in infrastructure. This would bring us closer to having an average annual economic growth of 3% during the 2 years of the pandemic, which is an outturn likely to be recorded by only few other economies in Europe. It should also be noted that the above projection includes highly conservative growth assumptions for Q3 and Q4 of this year. Namely, we have assumed another spike in coronavirus infections during autumn, both at home and abroad. If this wave of the pandemic proves to be weaker, implying no major economic consequences, our growth could exceed 6.5%. According to our assessment, fixed investment will increase by around 17% this year, accounting for more than half of this year's economic growth of 6.5% and contributing 3.8 percentage points to GDP growth. We expect personal consumption to go up by 4.5%. Net export is also anticipated to provide a positive contribution, with export rising more quickly than import of goods and services. The only negative contribution will come from changes in inventories due to the anticipated gradual decline in inventories of industrial products and the agricultural season, which we assume to be somewhat weaker than last year. On the production side, in addition to robust growth in construction, this year we also expect a full recovery of activity in most service sectors and continued growth in manufacturing. The rebound in service sectors will be buttressed by the rising consumption as the epidemiological situation improves and disposable income goes up. These expectations are also supported by favorable trends in the labor market and growth in private sector wages. Industrial production growth will be propped up by the activation of new and expansion of existing capacities and the gradual removal of bottlenecks in global supply chains on the supply side, and by the expected acceleration of economic growth of our main foreign trade partners and increased absorption of the domestic market on the demand side. With regard to medium-term economic growth, we judge that conditions have been met for us to revise up our medium-term GDP growth projection for the first time from 4%, as we previously anticipated, to a range of 4% to 5%. Having in mind the announced infrastructure projects in rail, road, energy and utility infrastructure, and direct and indirect effects on GDP. Details relating to the new GDP projection and the impact of construction on economic growth and other macroeconomic indicators are available in a special text box we prepared as part of this report. Our key expectation is that the share of construction in GDP will touch around 7% next year and remain at a high level over a longer time period, whereas the share of fixed investment ought to reach and exceed 26% of nominal GDP. According to our estimate, higher investment in infrastructure will have a positive impact on other segments of construction and the rest of the economy, most of all on growth in industry, trade, transport, tourism and catering, but also on sectors such as finance and real estate business. Overall, the risks to the GDP projection are judged to be symmetric, while uncertainty in the short term remains associated mostly with the global course of the pandemic and its impact on economic activity. Risks are also associated with future movements in prices of primary commodities and metals and the duration of bottlenecks in production and transport, which have to some degree been present almost all the time since the outbreak of the pandemic. Moreover, the speed of global recovery and the character of inflationary pressures will also determine movements in the international financial market, global financial conditions, and, by extension, capital flows to emerging economies. We judge the risks from the domestic environment to be mildly tilted to the upside, primarily on account of potentially higher than expected FDI inflows. On the other hand, as higher investment and faster GDP growth will entail substantial imports of equipment and intermediate goods, we have revised our current account deficit projection in the medium term from 4% of GDP, as we previously anticipated, to a range of 4 to 5% of GDP. The current account deficit will remain fully covered by the net inflow of FDI. The rise in export capacities, together with high product and geographical diversification, as well as the anticipated global economic recovery, will continue to work towards improving the external position. When it comes to the impact of economic growth on inflation, we estimate that faster GDP growth will not have an inflationary character, as the improved quality of infrastructure raises the economy's productivity. As the quality of infrastructure also has a decisive significance in stimulating private sector investment and growth in production capacities, the effect of demand on inflation ought to remain unchanged. Improvement of infrastructure quality could also work towards alleviating potential inflationary pressures, as it will quite probably also lead to lower operating costs in the economy. After the GDP projection, I will now touch upon some of the details from the inflation projection, a particularly current topic these days. After moving at around 1% in the first 2 months, in March, year-on-year inflation returned within the bounds of the target tolerance band. Inflation thereafter hovered around the target midpoint, measuring 3.3% year-on-year in June and July, which is consistent with our expectations set out in the May inflation report. High inflation then at the start of the year resulted primarily from a low base from the same period last year, particularly for petroleum product prices. Moreover, elevated global prices of oil and other primary commodities in the past months resulted in higher cost push pressures in the global and domestic market, primarily in food and energy production. A special text box we prepared for this edition of the report presents an overview of the impact of the base effect on inflation, as well as of the impact of global prices of primary commodities through producer prices. On the other hand, despite robust economic growth, there have been no major demand-side inflationary pressures that are more persistent in character. When it comes to inflation in the coming period, under our projection, it will remain within the upper part of the target tolerance band of 3 plus minus 1.5% for some time to come. With the waning of the effects of this year's rise in global prices of primary commodities and cost push pressures in production and transport, as of Q2 2022, we expect inflation to slow gradually towards the target midpoint of 3% and move within the lower part of the target tolerance band in the latter half of 2022 until the end of the projection horizon. That these are temporary inflationary pressures, which is the stance of leading central banks as well, is also supported by the fact that year-on-year core inflation in Serbia is still around 2%. Our projections show that core inflation should continue to move around 2% in the coming period as well, and record mild growth only at the end of the projection horizon. Given the anticipated movement of inflation, within the bounds of the target tolerance band going forward, and the relatively stable exchange rate, which is the underlying factor of price stability, you expect inflation expectations to remain stable until the end of the projection horizon. The risks to the inflation projection are judged to be symmetric. For the most part, they remain associated with the international environment and pertain primarily to the speed of global economic recovery, which will also affect the global prices of primary commodities and capital flows to emerging economies. To a lesser degree, there are also risks in the domestic market, primarily associated with the outcome of the new agricultural season and further dynamics of domestic demand. All macroeconomic projections, and this one is no exception, have to be based on certain assumptions. One of the important assumptions included in all of our projections pertains to movement in external demand. We expect it to recover significantly this year, owing primarily to progress in vaccine rollout. We assume that real GDP growth in the euro area this and the following year will be 4.6% and 4.4% respectively, which is in accordance with the projections of leading international financial institutions. Full recovery in the euro area is expected during next year, whereafter euro area economic growth should normalize in 2023 and equal around 2%. When talking about inflation in the international environment, projection for this and next year assumes the average annual euro area inflation of 1.9% and 1.5% respectively, which is in line with the latest projection by the ECB. Also, macroeconomic projections presented to you today were prepared under the assumption that favorable conditions in the international financial market will be maintained. Leading central banks in the world, the Fed and the ECB, continue to pursue an accommodative monetary policy to ensure fast recovery from last year's recession. According to the new guideline issued by the ECB in July, interest rates will remain at their present or lower levels until inflation reaches 2%, well ahead of the end of its projection horizon, and durably for the rest of the projection horizon. The Fed's latest projections envisage an increase of the federal funds rate slightly sooner than previously expected, but not before 2023. On this account, we expect continued high liquidity and favorable financial conditions in the international environment, which should also reflect on capital inflow to Serbia and favorable price of euro-indexed loans in the domestic market. Uncertainty in the international financial market primarily pertains to how much future moves by leading central banks will differ. It is also important to which extent these moves will deviate from market expectations, which mandates caution due to the possible impact on global capital flows and, by extension, capital flows to emerging economies, including Serbia. As for the international commodity market, in addition to the global price of oil, uncertainty also pertains to movement in the global prices of agricultural commodities, on which prices of processed food greatly depend. After trending extremely low in March, April and May 2020, just after the pandemic broke out, the price of oil struck an upward path with occasional falls and currently stands at around $70 per barrel. Based on the results since the start of the year and movements in futures for the coming period, we assume that the price of oil will be $71 per barrel at the end of the year and $66 per barrel at the end of 2022. As for the global prices of primary agricultural commodities, in our current projections, we assume their growth to measure around 39% annualized, though it should be noted that growth in these prices is in all likelihood over. The prices of these products mostly reached their maximum in May, leveling off and starting to decline gradually with the arrival of the new agricultural season at a global level. This is also confirmed by the FAO Food Price Index, which after a longer period decreased in June and July. To conclude today's speech, I would like to point out that the August inflation report includes 4 text boxes covering current topics. The first text box is focused on the assessment of the impact of rising producer prices in Serbia on consumer prices. In the second, we analyze the contribution of the construction sector to GDP and we will present it in more detail later on in the conference. The third text box explains the key changes in the labour force survey, which has been conducted under a new methodology in the EU, as well as of the start of this year, and how this reflects on key labour market indicators, employment, unemployment and participation rates. Text box 4 assesses the impact of the base effect, that is the low prices of petroleum products and unprocessed food, on movement in year-on-year inflation in Q2 and going forward, which significantly dictates the inflation profile as well. This is what I prepared for today. Shall we pass the floor to Sonia? She can present to us the special text box about the contribution of construction to GDP growth. Please, Sonia. Thank you, Madam Governor.
Thank you, Governor. As you've had an opportunity to hear, the MBS has revised the GDP growth projection of the medium term from 4% to the range of 4 to 5%. And the key reason for the revision are the direct and indirect effects of construction, that is, of large infrastructure projects that will take place in the next 10 years or so, and which are mentioned in the media, and whose implementation is increasingly certain. Namely, the construction sector has for quite a while been one of the fastest growing sectors in the Serbian economy, and it has a significant impact on GDP growth. Like I said, the construction sector has been one of the fastest growing sectors in the Serbian economy, and it has a significant impact on GDP growth. The key factors that led to a faster growth in the construction industry are the reform of the legal framework for the construction industry, the improved business conditions, the achieved macroeconomic stability, as well as the high inflow of foreign direct investment and increasing capital investment by the government. All of this resulted in the doubling of the share of construction in GDP. Namely, it increased from 3% in 2013 to almost 6% in 2020. Having in mind the growing significance of construction and its impact on GDP growth, it was important for us to assess its effects going forward. To do that, we identified around 40 large infrastructure projects, their approximate investment value, and we assessed also their value added, which is the category incorporated into the calculation of GDP. Of course, I will not list all the 40 projects, I will mention just a few. We are talking about the projects of building the Belgrade Underground, high-speed railways, Belgrade-Niš, Skopje, Novi Sad, Subotica, numerous highways, utility infrastructure in a large number of municipalities across Serbia, but also projects relating to energy infrastructure. So according to our estimate, the investment value of these 40 projects is around 25 billion euros, and the gross value is around 5 billion euros. Given that the horizon of this analysis, the period of implementation of these projects is 10 years, this means that on average each year we will have additional 5 million euros of value added in construction, and these 500 million euros make all the difference, and this is the reason why we revised the GDP growth projection. In terms of the conclusions of the analysis, the share of construction will increase from 6% under the new old projection to around 7% of GDP, and it will remain at that high level for a longer time period. As a result, the share of fixed investment, their share in nominal GDP should increase by around 2 percentage points relative to the previous projection. Already in 2023, they should reach around 26% and stay there in the medium term. Like we said, real GDP growth should move from 4 to 5% in the medium term, but more importantly, GDP per capita should increase in our estimates from around 7.4 thousand euros this year to around 10.5 thousand euros in 2026. Also, faster growth of the construction industry will exert favorable effects on other sectors of the economy, such as industry, transport, retail trade, tourism, and catering. And finally, faster economic growth will not give rise to inflationary pressures, as it will increase de facto economic growth, but also what we call potential growth or output potential. So these would be the main conclusions of the analysis. For more details, please take a look at text box number 2 in the August inflation report. Of course, we stand ready to answer any questions you may have.
Danilo could say something about the improvement of our projection models, so that people could have confidence in what you speak. So we have included the effect of fiscal policy in the medium-term inflation projection in our last phase of projection, which we present to you now. And we received the results that the expansionary fiscal policy during the pandemic prevented a deeper fall in aggregate demand. However, in the coming period, once the effect of these temporary outlays of support wanes, it will have a restrictive effect. It will have a lesser contribution to inflation, because when you have outlays in one period and you don't have them in the coming period, then in the second period you pursue a restrictive policy. So Danilo doesn't speak a lot, but he's very trustworthy. And when it comes to all our preliminary medium-term inflation projections, together with other members of the executive board, we also have Anna Ivkovic here. Dragana Stanic is with us as well, but she's not currently here. But all this instills confidence that we change rarely our projections, and we gladly usually revise them upward. What else would I like to emphasize? As yesterday, our interventions in the FX market reached the net value of 900 million euros. In 2021, in the post-pandemic year, when we still feel the effects of the pandemic, we have some changes in the usual seasonal factors, which since early year affected the depreciation of the dinar, but we also have the continuation of the inflow of investment in the real sector, portfolio investment as well, and some specificities are here important, and they became evident at a particular point, and Nikola Dragašević will present them. He is my both right and left hand when it comes to these interventions. Thank you, Madam Governor. As the Governor emphasized, this figure 9 is the symbol of this inflation report, and since early this year, we have bought 900 million euros in the FX market. The question of the exchange rate is something that has been a topical issue over the years, and over the past months, many economists have been criticizing perhaps us, saying that the dinar is strong, and I would like to refute such claims. I believe that that we should conclude these discussions, because the NBS has intervened by buying foreign currency in the last 5 years. That is, in the last 4 years, the NBS has been buying foreign currency. We have been intervening in order to prevent excessive strengthening of the domestic currency. So the currency is not unrealistically strong. Since 2017, 18, 19, over 2020 as well, we have been net buyers. And if we include the pandemic crisis year, when we net sold 1.50 million, we have net bought 4.45 billion euros. I believe that since as at yesterday, we bought 900 million euros, and until the end of the year, taking into account all the good data, continuation of export activity, continued FDI inflows, and so on, we believe that we will fully offset the effect of sold foreign currency, that is the currency sold in 2020. So we are now close to this 1 billion euros, and until 2021, we believe we will fully offset this effect. What were the effects that are different compared to 2020? In 2020 was a crisis year, and we saw the opening of the current account deficit, and this is what is first seen in the FX market. We had elevated demand of domestic companies for foreign currency, and this net demand was conditioned by weaker supply. In 2021, we have seen the continuation of all the previous years, that is an increasing supply of foreign currency in the domestic market of domestic companies. This supply of this FX supply is not conditioned by weaker activity, but on the contrary, by increased economic activity. Both demand and supply are on the rise, FX demand and FX supply, and supply is rising at a faster pace. Exports are rising also at a faster pace. And what the governor, as well as FDI, what the governor and my colleagues said concerning the rise in net exports, that is the reduction in the current account deficit. And also when it comes to the FDI inflow, all this is fully manifested in the domestic FX market by the fact that supply and demand are better matched. We also have a better balance, higher equilibrium when it comes to foreign investors. On the 30th of July, our 3 dinar bonds were included in the JP Morgan index family, and we have been put on the international investment map, and the investment base has broadened, and a central banking institution, a central monetary authority, has for the first time invested in dinar long-term securities. This is the Monetary Authority of Singapore, that is the Central Bank of Singapore, and an increasing number of reputable foreign investors are investing in our securities, and this triggers an inflow of foreign currency as the pandemic is slowly waning and we are recovering from it. We also have the tourist season, and we also see this in the domestic market, and a significant factor of this is a higher presence of foreign tourists. This started earlier as well. This has a seasonal character, usually appears in July and August. Already in June, we had an increase in FX because of the stay or transit of foreign tourists through our country. Given all this, it is no wonder that we say that the central bank responds to mop up this excess liquidity, and we thus increase FX reserves. They're even now higher than at the end of July. They equal 14.8 billion euros. And economic growth is going up with the better equilibrium of economic flows, which means that we have ensured stability over the past years.
Since you've noted the difference regarding Czech Republic, and its development. If you can only add a few words about this, and if you don't have the exact data, I will give those that you supplied to me. No, I do have them, but countries that have appreciation of the exchange rate, this slows down investment activity and the economic growth. And where there's the case, then the Czech Republic, Hungary, Poland, and other countries couldn't have achieved such results. The example of the Czech Republic is the following. From January 2020, its currency appreciated by 4%. From, if I'm not mistaken, the Czech koruna was worth 35 kronas per euro. And in mid-2008, it stood at 23. So it appreciated by 30%. At the same time, the Czech Republic recorded an FDI inflow of 60 billion euros, net inflow of 45 billion euros, and it managed to more than double its exports. And now we are talking about the Czech Republic as one of the most developed countries in Central and Southeast Europe. So not even the appreciation of the exchange rate is an obstacle to export growth and investment growth if such export and investment is based on structural policies and structural factors. And if you are improving your business environment and if you are managing to maintain macroeconomic stability, then no strengthening of the domestic currency by 1, 2, or 3 dinars can have a major impact on exports or imports. So you have to focus on structural policies. And this is what started happening in Serbia since in 2012. In the same period, we managed to double our exports of goods and services. We managed to halve the current account deficit. The current account deficit is more than fully covered by foreign capital inflows, primarily by FDI in the past 5 or 6 years. If you take a look at the balance of payments, we have recorded the balance of payments surplus in the amount of 1 billion euros on average. And thanks to this, the MBS manages to increase its FX reserves by around 1 billion euros per year. So you have accelerated economic growth and a situation that in the private sector you have employment higher by 350,000. And higher salaries in the private sector by 20,000 dinars. So they increased from 40,000 to 60,000 dinars. So we highlighted some of the main issues that we considered to be of special importance for you, and now we give the floor to you. You may raise any questions. We are here to answer any questions you may have.
For Ms. Sonia, you mentioned 40 projects. These are the largest projects, or these are the projects that you arrived at based on your analysis? These are all the largest projects which we have identified. Yes, there will be many more of them, of course. Bloomberg agency, you mentioned that we had only 1 ton of gold outside the country. Recently, there was a comment from the top of the government. They talked about the aim of around 50 tons, but we were not sure about the dynamics. Are you working on that? Is that the official objective of the central bank? At what dynamics should this go? If this is correct, if this is true, and your comment, please, on the circumstances leading to not keeping gold reserves outside, abroad, but in the country. I will start from the last question. The so-called repatriation of gold reserves is a general practice. Germany is doing this, advanced economies, including Serbia. Given the circumstances in which we operate, the disputes that have arisen with other countries and gold held in London, gold of other countries, no country wishes to have some risks when it comes to transport as well. For instance, if they need such gold, we had such a problem when we had to get to the country cash because we had increased demands for the payment of cash, but we responded very quickly, and this trend calmed the trend of requests to raise cash. So nobody wishes to run these risks, and this is the general situation. The National Bank of Serbia has achieved its objective in terms of the share of gold in total FX reserves. It equals somewhat over 12.6% currently. It is above the countries, above emerging economies, where the average is around 7.4%, and a little below advanced economies, which stand at around 19.4%. And these advanced, this is the share of gold in total FX reserves of advanced economies. But Serbia is specific because we are not the United States that have the dollar, or China, which have the currency that has the aspiration to be a reserve currency, and our FX reserves in gold should be in the country, and they are in the country, but gold is not an interest-bearing asset, meaning it doesn't yield profit, it doesn't create costs either, and today money is spent, it doesn't earn, it has negative interest rates, so at least you don't have this cost on money, but you have to make sure that your liabilities of the country correspond in terms of the structure. They are in the currency in which you can timely respond and settle all your liabilities. In this way, for instance, we have said that the Singapore Monetary Authority has invested in our securities. We are the country that settles its liabilities within the prescribed timeline or at the moment of maturity. Gold is not easily marketable. And we also make this diversification so that the state of Serbia can settle all its liabilities in line with the undertaken contractual liabilities, inherited obligations as well, which are significant. And we were extremely cautious when analyzing future gold purchases, and all will depend on our need to support the economy primarily, because the economy produces jobs, wages, demand, budget revenues, and once you meet your primary needs as well as in your private life, the surplus you can leave aside can be left in gold. For the time being, we are satisfied with the level of gold we have, and we will also consider the right moment to buy gold at the best possible prices. And as in the previous, on the previous occasion, the public will be timely informed about the price at which we bought the gold and other aspects. And when it comes to the difficulties of bringing in gold in the country, this can be left for our future memoirs. Yes, but we were really satisfied. It was really difficult to draw this 1 ton, which was left from the succession period for Serbia. It was kept in London. Great Britain is no longer a part of the EU. We needed to get the export number and so on. I will not mention all the details and the enormous effort we invested in it, but this was our job and we managed to complete it successfully. And one more thing. Until 2 years ago, we were buying all the gold produced in Serbia, and it was delivered by RTB Bor and now Zin. And when we buy gold from domestic production and when we buy gold abroad, the price is the same. This is the stock exchange goods, but we need to monitor to catch the most favorable moment when doing this. And it is our obligation to monitor the best moment and to choose the way of reaching this figure of 14.8% of the country's FX reserves. And perhaps this is what makes perhaps the difference between the then and the today. When I say then, the circumstances were not really auspicious. Perhaps we were trying to somehow find our way, and we had the Brexit, we had the Greek crisis, and we somehow learned from those lessons, and this helped us to weather this crisis more easily than other countries. We are serious people who are forward-looking. We don't look only at the 1 year future. We have our analysis, projections and models, and the case of the Czech Republic was really interesting because it is similar to our case. We didn't look up to it, but we are an institution that pursues its own policy, aware of our specificities and our position in the world, and we are aware of the openness of our small economy, and we are aware of the interlinkages between all the economies in the globalization which you can't avoid. We don't try to be too smart or to emulate others to see how much others have and so on. We do what is the best for our economy. And when you asked Milica the question about whether all the projects are there, when a new model was presented to us by Danila, and he said that any variable, any element in terms of a change in production in any of significant capacities, he can introduce any of these variables and see how this will affect the final outturn. That is not only the GDP growth and all other aspects that we are responsible for. And I asked, is this possible for any enterprise, any company? I can't do it for every company, but I can do it for large companies. But perhaps until our next presentation, Danilo can, together with his associates, make a model which will be able to capture all the small granular data. And as Nicola said, FX enters the country through payment cards of tourists. 4 years ago, we saw that we had a residual that was some FX inflow, and we didn't know its origin. And within a week, we understood that those were the cards of tourists coming to Exit or Guča in Serbia, and we introduced the regular practice of monitoring this part of the FX inflow. And in this way, we don't have these residuals, which are important. No matter how important they are, we pay attention to these residuals, we regularly monitor them, and that's why we have this certainty when we make projections or when we answer questions which are increasingly not so reasonable, so to say, when it comes to the impact on exports and exchange rate and so on. The questions of those economists, when they had the chance to do something, they didn't use this chance. And today, the ECB published an article which it titled "The Conflict of Economists, Academicians, and Those Who Work in Research Centers of Central Banks and Other Financial Institutions," and then they changed the title, and this conflict was renamed into. They just made a comparison. They first dubbed it a conflict of interest, within the research itself, and they just made a comparison between those academics and those who work in research centers. And we concluded that it's not about whether those are academic circles or professors of different rank or those who work in some commercial banks or central bank or in the ECB, the Fed, or at the London School of Economics. So this difference is made by man himself and his professional honor in terms of his or her approach to how realistically he analyzes the things he reaches, the data he processes. This is what makes the difference when you make an analysis, whether you want your paper to be published in a book where you will get some particular number of points, whether you want to ingratiate with politicians or your colleagues, or if you're a central bank of Serbia, which wishes to deliver a result for your citizens, who expect from you to do the best possible thing in the given circumstances. I apologize, I was a bit too lengthy, perhaps.
Maybe we will reach the 50 tons of gold. I have a friend who says each of my analogies is a journey around the world. But these 50 tons of gold are reachable. Maybe we will reach them. It all depends on the circumstances in which we operate. Gold is very beautiful. Trust me, after 9 years as a governor, I entered the vaults for the first time and saw the gold. And that is why I decided to buy red and golden cloths that will embellish everything additionally. I wanted us to instill a sense of security. I wanted us to achieve 36.7 tons of gold. And when they ask us, why did you buy this, I will tell them, we only replaced the types of assets. These are no longer foreign exchange reserves in US dollar, but in gold. Everything that was bought from RTB Bor was bought in dinars, because we make payments in our country in dinars. Yes, at the stock exchange, at the exchange prices. And when we mop up excess liquidity because of imbalances in supply and demand, these are also the earnings of the National Bank of Serbia, which manages to make profit and which manages to prevent excessive appreciation of the dinar, and as a result has enough money to buy gold. So, like I said, maybe we will reach the level of 50 tons of gold. Maybe you can video record this gold and show it to us. No, it's not allowed. This is a restricted access area. I entered it only with the general manager of the cash department, and we made a private photograph by phone. And when we did that, I asked them whether this was permitted at all. Marko Subotic, Euronews. If your assessment about GDP growth proves correct, this will probably be the highest growth in the past 13 years. But what can Serbia do in order to maintain such high growth rates? You mentioned the medium-term growth projection, 4 to 5%. What are the mechanisms, what are the institutional changes that need to be made in order to have growth of 6 to 6.5%? And the question is whether the National Bank of Serbia can, through the type of monitoring or supervision, check what is happening with banks who are introducing commissions and fees on an increasing number of their services. They're starting to charge online services. Whether the MBS can do something about this, or it is the discretionary right of commercial banks to do whatever they want with these fees. We have been talking all the while about the fact that we changed our GDP growth projection from 6 to 6.5%, because if the pandemic does not prevent us in our efforts, and if the countries with which we cooperate, because we are a small and open economy, if they do not suffer any major consequences, we expect to surpass the 6.5% that we have projected. So we're talking about upside risks. What are we doing to make this growth at the level of 4 to 4.5%? No, the institutional policies are not the ones that matter, but structural. It is rather the structural policies that Milan mentioned, and this is what the government of the Republic of Serbia is working on. And please do not take this amiss, not resent my phrasing. This is what the government does at the insistence of the President of the Republic. And he insists that all these structural policies are designed in a way to make the growth sustainable. And we have to explain to citizens what economic growth means for them. And when you are asking questions about fees, I'm telling you, do not ask me about the consequences of something that has its roots in something much more serious. Banks are important because they support the credit growth of companies. There are companies that have their own funds and they use them for investments, but these companies are few. There are companies that have some alternative ways of financing, and we are also working on developing these new types of financing. For instance, for startup companies, we are working on investment tokens, of course, with great caution, because we don't want these modern concepts to bring new risks. We don't want people to believe that you can make something out of nothing. There are different types of financing. Yes, it is best if you make investments from savings. It is best if citizens have mattress money if they can finance their investments from own sources. But sometimes they have to use loans. Banks, as financial institutions, finance the development of each economy, and that is why we have to ensure to them, as to all other actors, stability in their operations. We should not let them mind their business only, because they depend on clients too, but if no matter what part of the authority in this country, except for the judiciary, which decides on everything depending on how they interpret the law, the National Bank of Serbia is an independent institution according to the constitution, but all of its instruments and measures are designed and used in a way so as to support the economic policy of the government and to make the living of our citizens and the business of our corporates more easier. So these are some basics, and I'm not philosophizing now. The same applies to banks. You cannot run a campaign against banks in terms of asking questions whether the fees or their fees or commissions are unjustified. Let me use this example. For instance, we received a query for the payment of 3,000 dinars. I paid a fixed fee of 30 dinars, and then this proved to be 10% interest. But wait, even if the amount of the payment was higher, the amount of the fee would be 30 dinars, and it would be 0.1% of the total payment. So we try to make sure that all charges of the banks are disclosed transparently. Ever since the effective interest rate was introduced in 2006, the citizens have been ensured comparability of fees across banks. So lack of knowledge, lack of do not underestimate citizens who are going to the bank in order to take a bank loan. Nobody forced them to go there. They're forced by problems, by lack of funds. I will tell you an anecdote. When banks at the time wanted to introduce valuers to perform real estate valuations each year, in our executive board meeting, I asked my colleagues from the banking supervision department, I asked them, why does the client have to pay for the services of a valuer hired by the bank each year to see whether the mortgaged real estate property is appropriate collateral for the loan? If we have a real estate tax, which is paid annually, then the tax administration should do the valuation, and it will not make a lower valuation than the property actually is, than the property's value actually is. Of course, we now have EU directives, and for some borderline values, the repayment terms, we have to work on this, but you cannot force borrowers to pay something that, in colloquial terms, you will give jobs to somebody. And do you know what lawyers told me? A lawyer who took a loan to buy his first home, he said, I have to pay for the valuation of real estate property. And he said, if they asked me to give 5 liters of blood at the time, I would have given it to them only for a loan to be approved. And I told him that this is not an answer for me, because defense through coercion is not a good excuse for anybody who is complaining tomorrow, even when their loans are repaid. And then we have a developed branch of economy, which is the resale of clients in terms of collecting fees for already repaid loans. In other words, I respect citizens who are responsible enough and who have on the National Bank of Serbia's website detailed information about bank fees and charges. Please take a look at the website. Also take a look at the website Commodities, where you have all the information about the fees, comparable data on fees. Then the EBRD, there are some EBRD experts who offer for you to take a loan, to process, to make a comparison of all loan offers, and then to give you an offer. My associates told me that they do know some of these people, and I asked them, where do you get the license to do that? From EBRD, or who is the person authorized to select the most favorable loan offer? I believe that it is all about the time that we live in, where everybody is trying to find an excuse, to find a way to earn a living, but at the cost of all of us. If you are bringing into question a loan that is repaid and that was taken in 15 years ago, and if you're bringing into question the fees that were charged for that loan. I think that this is an effort to destroy all the efforts that the MBS and the government have done in order to get the dinar bonds included into JP Morgan. And all of this upon the advice of a man whom I will not mention, but he's one of the investors who put on his profile the confluence of the Sava and the Danube, because he has come to love Serbia, because he knows the people he works with. And all the things that we have done so far, I cannot maybe bring you into the treasury vaults. Maybe I can show you photographs. I can show you how well this gold looks in our treasury vaults. But here we know what data we can provide, what data we cannot provide, because the National Bank of Serbia is the operator of 9 payment systems, including RTGS, instant payments, clearing. And when somebody wants to know whether some payments were made for whatever reasons, I will not go into them. I, who am the service of all this, I cannot provide your data. This would be equivalent to trading in data by banks. The same as when you Google something, and the day after that you receive advertisements for those goods that you Googled up the day before. Then why don't you sue Google for this? We do our best to keep banks in check to the extent we have inherited the freedom that is unrestricted, to the extent that bothers me most, that data on clients and the IT system can be outsourced. This means that a bank can operate in Serbia. We will call it a legal entity. It will operate under our legislation, but, for instance, in the process of a merger of 2 banks, its data will be available in 3 countries, because their IT system lies with the headquarters. Their headquarters are based in the EU, and then the headquarters outsourced the IT to a third country. So it happens that data on bank clients are not, I don't want to say that they're abused, but that they are located in 3 countries. I think that the basic and very true philosophical thought is where they say that the state and the society are a ship that cannot be pulled ashore to be repaired, because it has to navigate. So in this context, I could not have removed and eliminated all the weaknesses of excessive freedom of neoliberalism, and I could not have resolved this instantly.
Yes, it is true. At one point, banks do have freedom, but we have limited this freedom through our bank supervision. When it comes to advertising, that first they have to show to us the advert and then to offer it, and they don't like me or my associates. I'm not worried about it, especially those from the Bank Supervision Department and the Consumer Projection Department, because we try to fight this phenomenon. But these are things that are really uncritically taken over from other countries. People say, for instance, in Germany, the fees are prohibited, but only 3 years ago, and in Austria, Hungary, and other countries it is illegal. But who should we look up to? When you use a loan, you want to have low interest rates. When you're a depositor, you want to have the highest possible rates. And I tend to say, for me, relative stability of the exchange rate is the point of compromise where the interests of all meet. So the stability that we talk about and open analysis of the structure of the interest and the disclosure of all data, but there is also the obligation of citizens to read the contracts they sign, whether they sign contracts on savings things, or current account overdrafts, or loan contracts, and so on. What I criticize myself about is that the Central Bank of Serbia, headed by myself, has let others for such a long time how to treat fees that have become the subject of courts, because courts are overburdened with such cases. Since 2006, either lower or higher instance courts, not even the Supreme Court, has had a singular or a uniform approach. None of them has addressed the Central Bank of Serbia to ask what was the rationale behind those legal provisions when we prescribed the effective interest rates, which has to disclose all costs. So even for the lowest value court dispute, even such a dispute is important. But the National Bank of Serbia is not being addressed to explain what it wanted to do with such effective interest rate. So I blame us, because we wanted not to meddle into the job of other independent authorities, but things unfolded as they have unfolded. But I would like to have a solution, and everybody should understand that without banks we can't have credit growth, we can't have consumer or other loans, but also banks should be mindful. They can't say, well, this is a new thing, and so on. So in my books, there should be cash, that there should be e-banking as well. There should be the possibility of paying by IPS and so on, by mobile phones, because not all of us have the same preferences when it comes to saving or communicating with banks. And today there are so many different chances and opportunities for you to meet your needs, so that without such chances, there is no progress. So, for instance, you have reached the moon, or you have broken the atom into a myriad of pieces, but you haven't managed to change anything in your human nature, whose essence is greed and envy. So this was a quotation. I apologize for taking so much time to answer. This is a huge worry for us. It's not being solved here or in a conversation with you or through the media. I don't like it when a journalist has a personal problem with somebody and he makes some cases out of that, and out of one case some people can think that there are many of such cases. I would like to talk about these things in a concrete way. The President of the government understands the magnitude of the problem, but she's not actually in the position to deal with all this. She has so many other, perhaps even more important problems. But I'm afraid that if this problem is not being solved timely, it will affect negatively the balance sheets of banks, and this can go even further. It can result in refrainment from lending if we don't have legal certainty. This brings about risk aversion or restrainment from taking loans. And you all remember an article in newspapers. Citizens said that banks didn't have the right to put them on some black lists. When they sued one bank, other banks refused to issue loans. I'm sorry that banks didn't understand the severity of this problem as well. With the problem, when it comes to the problem of Swiss franc index, the loans, lawyers found a way to earn some money and so on. They will find some other avenues to earn money as well, for example, in insurance, or that some thing was not covered and so on, because they just look at the examples in other countries. But I believe that none of these things is naive, and it boils down to what I mentioned just now. People ask us, why do we place such focus on Chinese investment? And for example, a journalist pens down an article and he says China is an insignificant investor, but since 2014 we started to cooperate with them, and since 2016 they have invested over 2 billion. In 2018 and 19 they have reached actually 18% of the share of total FDI. So our predecessors did not cooperate with China, and when you look at the period from 2014-16 until 2020, if you take such a short period of time into account, it can look insignificant. But for instance, EU countries sometimes invest through the Netherlands, and this turns out to be the home country through SPVs and so on. China also invests through Hong Kong and so on, but they want to prove that in fact China does not invest in Serbia at all, as if we didn't see anything, as if we didn't have any real data, in fact. And then you reach the situation when you see that you have those who ordered some articles, and you see that there are some people who want to present their disputable truth as the only truth, and this truth turns out to be personal ownership of somebody. I do have a political background and I take pride in it, but I have always been an economist, even in politics, and I hold to truth and professional honor. This is what I adhere to, and even when I was accused in the past, when they used to say, do not plead with citizens not to withdraw money from bank tellers and so on. And I said, I don't do that. I just believe that panic is not good in the economy, because economics is a social science and we don't have laws of physics and chemistry that apply there. And when you have the skin in the game, which tell when you have this personal responsibility, when you have these people who stand behind their decisions and they want to act in the best interest of all the citizens without taking into account the specific period to show how good we are, or what we faced, or what we are afraid of, perhaps. So
Mr. Stoyev, I will never forget the wonderful interview we made, and RTS published it on Sunday at 2 p.m. It was also the anniversary of my second mandate. It was a great day. You had good questions, and my answers were really great. And then they call RTS a pro-regime media. Maybe somebody doesn't like you, or maybe somebody doesn't like me, but I can tell you that that interview is one of my favorites. The maths show that if we bought around 705 million euros in June and July, until yesterday we bought 195 million, whereby we reached 900 million. I will tell you, yesterday we bought 35 million euros. No, my question is much more difficult. No, there are no difficult questions. There are only incapable men. In early July, before the Executive Board's decision about the key policy rate, it seemed that a further decrease is not on the table, because the desired effects were achieved, robust economic growth and so on. But further appreciation pressures on the dinar which are extinguished by these FX purchases, it turns out that a further relaxation is possible. Is that the question? Yes. When in December last year we lowered the key policy rate, I told my associates that I don't like raising the rate today and then lowering it tomorrow. We realized that we have an additional mechanism called the repo rate. These are our weekly auctions where we assess excess liquidity, where we mop it up. And this rate is an additional mechanism for us if we need to respond more promptly to any changes that may require such a fast response and that achieves its effect faster than the change in the key policy rate. Not because we want to be different from other central banks, but I can tell you that other central banks too, and those who analyze central bank moves, said that Serbia has shown that it forges a path of its own because it did not embark on a downward revision trajectory and then again on an upward revision trajectory. So we give a personal seal to everything. We want to persevere with our decisions. When we make decisions, then these decisions are carefully thought through. And once these decisions are made, we cannot have any contingencies except for the pandemic, which nobody couldn't have foreseen. But with such a team of people, with daily improvement of our models, ways of reporting, ways of monitoring, everything that is going on, we cannot afford ourselves that type of zigzag movements, no matter if other central banks do it. So we have maintained the key policy rate at the same level because our way of pursuing monetary policy has already become recognizable. Maybe Nicola said it earlier, but when in 2014 I spoke about interventions in the interbank foreign exchange market at the BIS Basel Forum as one of the key instruments of monetary policy, somebody did not believe me, but today, and we can supply you with texts supporting this, saying that interventions in the foreign exchange market are an important tool in appeasing the market and in maintaining stability. In the same way, in 2017, in Japan, at the first meeting of BIS Basel, held outside of Basel, I said that communication is one of the monetary policy instruments, the way you communicate with the public. And it turned out, and at the time, though this may seem immodest to you, the Vice Governor of the Bank of England told me, "You are completely right." I said, we cannot be hermetic and closed. We cannot speak in some obscure terminology. We have to be understandable to those whose business decisions depend on the decisions we make. So this type of openness and simplicity is something we are proud of, to the extent that my colleague Savo cannot say, I share my presentation, but I'm presenting to you my presentation. We have to be clear. We cannot pretend to be someone else, because we are working for those people who have to who have the money whose value is maintained by the national and guaranteed by the National Bank of Serbia, but the National Bank of Serbia cannot do this alone, but in coordination and cooperation with fiscal authority. So together we maintain the value of the dinar. And often they ask us, why do you have an arrangement with the IMF? We do not mind the IMF. We need an additional assurance when nobody trusts nobody, and we do not mind talking to investors and presenting to them everything we can. And not very often, sometimes they get some ideas from us, sometimes we get some ideas from them. I cannot say that we are the best in the world, but we definitely are among the best ones. And that is why we did not lower our key policy rate further, because we do not want to be in a position to have to revise it upwards later on, because this would call for adjustments, and adjustments are something that people do not react well to. For the time being, we are stable and conservative. We keep a close eye on everything that is going on. Thank you very much for the cooperation that we have with you. Not only you, but Bloomberg, your headquarters. You follow everything that we do in the way that JP Morgan Chase does. And all of this gives us additional strength to persevere in this job. That I have to tell you an unpleasant fact that some young people have left the National Bank of Serbia, and two of them said that instead of working on the improvement on work processes, they are using in order to reply to all different queries that they get from the public and from companies and from banks. But you have to understand that we are very open to the public. Somebody invents something and you have to defend yourself, and you have to involve your experts to refute these allegations. They have to prove that the executive board is not the solution to everything, and so on and so forth. The questions about the moratorium. And if one interview was concluded with the words where a young person says that I cannot cope with the amount of rage that I see in the query made by a citizen, and I will therefore leave this job and take another job that I love less. But then this makes me wonder, where are we heading as civilization? If somebody is running away from communication where they have to justify for where they have to make justifications. My colleagues know what I'm talking about, and you have here before you only the people that are the strongest and who can cope with all the pressure. I apologize again for taking too long and for being too extensive. Thank you all very much for your attention, and I apologize once again for taking too long.